Hello traders, Jeff with optionboxer.com. Before I get into the reason behind this particular video, please know that I am not a registered financial advisor and this is not a recommendation for you to buy or sell any security. You should always do your own research and please be prepared for the risks that are involved in trading prior to placing any trade. I heard someone, or I was reading something the other day and someone said losses can exceed deposits. So that statement right there makes it pretty clear the risk involved with trading. So I want to look at this this extreme downtrend we're in here. The market has pulled back substantially in the last just couple of months. Looks like we made our high back in late September, and since then it's been all bad all the time, at least with the exception of a couple of minor pullbacks here. I am looking at a weekly chart, so it's kind of got these candles bunched together a little bit more than it would on of course a daily chart. But you can see on the daily chart it even looks a little bit scarier. So let's go back to the weekly chart. I just want to identify where I think this market is headed. Well, I don't, money management is I think the answer to any sound trading plan. So it's hard for me to make a video and speculate about where I think price will retrace. Again, I say it's hard, but I'm going to attempt to do that here. So the first level that jumps out at me would be somewhere right in here. Oh, my apologies. Let me get the proper drawing tool. So the first price level that jumps out at me would be somewhere about right here. I guess you could make the argument that there is a potential for some support right there. I just don't think that's a major support level. I think the next major support level would be down here. And then I think the more likely, and this is just a gut feeling, the more likely support level would be somewhere near the 2100 level. And the reason I say that as a gut feeling is just because you can see price really struggled to break through this 2100 level before it continued much higher over the next couple of years. So that's kind of my prediction at this moment. I don't think it's going to fall straight down to 2100. I think we're going to get maybe a couple of brief pullbacks before eventually finding some support there at 2100. And who knows, I mean, this thing could very easily reach 2100, pull back just a bit before continuing lower, maybe even down here to 1800 or so. I don't think that will happen because I think the economy is still relatively strong. I'm not a big economist. I'm just a trader, so I'm just speculating here, just throwing out some possibilities for you. But regardless, I think those are the next two major support levels, and just to split the difference here, you could say this might be a decent buying zone somewhere in here. If price does manage to make its way down that low, I would certainly think that would be a decent buying opportunity. If it falls below this level, I think it could get pretty scary pretty quick. Just for the sake of this video, I mean, take a look here. This is the top of, or this was the peak we reached before entering into the financial crisis, and kind of this block here that I've got highlighted now that you can barely see the candles is what they're referring to, or what, here we go, is what's known as the financial crisis. Back here is the dot-com bubble. So you can see the dot-com bubble and the financial crisis were very similar. The only difference is this was a little slower bear market and it kind of took its time moving down, whereas this started off slower and then just absolutely fell out, so and reached a low down here at 665 according to the chart here. But then look at the bullish move we had afterwards. I mean, we had the dot-com bubble and we had a modest but pretty darn good bullish move, and then we hit the financial crisis. But look at this bullish move here. I mean, if it breaches this level, I mean, it could get pretty scary pretty fast, with the next major, get my tool back, with the next major price level being at these peaks here, or the next major support level being at these peaks here. So the obvious question next is, how can we trade this and capitalize on a downward moving market? Remember, options give you the ability to make money when stocks are going up, when they're going sideways, or possibly even going lower, as we see here. So let's take a look at, we'll just go to SPY for the sake of this video. The SPY tracks the S&P 500, and the chart I was just looking at is the S&P 500 futures. Regardless, they all look the same, whether you're looking at the SPX, SPY, or the futures. They're all very similar. and they all track the S&P 500 market. So now that we know, or now that we have an opinion, or now that I have an opinion that the market will continue lower, at least down maybe to 2100, we're just simply going to take a look at some trades that would capitalize on that. So the first obvious trade would be, let's just buy a put straight out, but of course that's going to cost you $950. You may not want to risk $950 on one trade. So what do? We buy a vertical. That's going to cost you 40 cents with a maximum profit of $60. If that's not enough for you, you could always widen out the position. So you go down to maybe 230. It's a $3 wide spread, so you can see we're going to get $2.80, $2.84, I guess, as a maximum profit. If that's not enough, you could widen it out even further. I don't like to set my vertical spreads that wide, but you may. I've seen people do them 30, 40, 50 points wide. It's certainly up to you. But the one thing I would like to point out is, if you take a look at the VIX chart, you can see implied volatility is relatively high. You know, if you look back here and if we drew a price level at where price is now, all the way back here, you can see that only 1, 2, 3, 4, 5, 6, 7 times has IV been higher over the course of the last 20 years. So I would say IV's high across the board. With that knowledge, sorry, I'm going to go to the trade tab. Let's get back to SPY. With that knowledge, the more obvious thing to do would be, let's capture some of that and sell some premium. So you can sell a vertical spread. If you had the buying power to do it, you could sell a naked call. Now, I don't suggest it. Naked calls are very, very risky, and that could go south real fast. But I would just sell some verticals. Take advantage of the opportunity that you have while you have it, and possibly sell some verticals. You know, you can come out here maybe 75% probability of success or probability of profit. If 32 cents isn't enough for you, you could always widen this out. So we do the 248, maybe 250, 251. Take you, well, let's go one more. Let's go 252. Take you $1.14 off the table with about a 75% to 80% probability of success. Draw this here. Expiration date is February, so that's good. So we got a 72% probability, a mathematical probability of success. Of course, if it goes lower, you have the chance to lose $286, as you can see here in this blue number. And if it stays below 249, which is your break-even number, let's set this slice to the chart so we can see it. So as long as price stays below this line here, which should also be discussed, is that it's kind of the halfway point of this large down candle, and it is running into some potential resistance levels there. So that's just kind of a trade idea you can make, but I would certainly take advantage of the elevated VIX that we're in right now, and try to sell some premium if you can. Okay, I hope that video was at least mildly enlightening. Maybe I didn't say anything that you didn't already know, but there may be some traders out there that could gain some value from what I had to say. Regardless, if you have any questions, feel free to reach me at optionboxer.com. Thanks for watching.